on another COVID relief package. This video, however, is to clear up any confusion regarding the increased child tax credit. Normally, for those who qualify, the child tax credit is $2,000 per child under the age of 17. In this COVID relief effort, there is a one-time increase, meaning this is temporary, of $3,000 per child under 17, $3,600 under the age of 6. But when I say it's not what you think, I mean that you will not see that credit this year. How this helps those who need it now, I don't know. Which is probably why there is currently an effort underway to provide half of the credit in monthly installments beginning in July of this year. Let's talk about it. People, what is going on? It is good to see you guys back on the channel that is empowering you with the knowledge to help you build generational wealth. I am Mia, and I reveal the financial education that we do not receive in high school. And as you saw in the intro a while back, I reported on the additional child tax credit that was included in the last stimulus package. Now, you did have the option to opt out and receive it all in one lump sum next year, but if you chose not to, then you will receive half of it over the course of the rest of this year. The reason for this video though is because I am seeing a lot of people upset that they didn't opt out and are now receiving this money that they either don't want or don't need. But let me tell you why this is actually a good thing. You do realize that a tax refund is just money you are loaning to the government interest-free, right? Tell me what bank or financial institution is loaning you money for free. Let me help you out. There is none. This advance payment of the tax credit is your money. And even if you just throw it in a basic savings account, you will make more on it than if you wait for the government to give it to you a year from now. The only reason you should opt out of the tax credit is, hi guys. Sorry to interrupt, but she filmed this a while ago, and since then the deadline to opt out of the advanced child tax credit has come and gone. And if you are one of the ones who feel that you probably should have, there are really only two legitimate reasons for you to have done so. The first is if you typically owe money to the government when you file your taxes, if you own a business or in a higher tax bracket, if you claim more exemptions up front, whatever the reason. For those who typically owe during tax season, it would have been a decent idea for you to opt out of the advanced child tax credit because the tax credit will help you to relieve your tax bill. So let's say you owe $4,000, but you qualify for $3,000 in tax credits, then your total tax bill is only $1,000. The only other reason it might have been a good idea to opt out is if your qualifications will change before you file next year. So let's say your 17-year-old will turn 18 before the year ends, and you think you might have to pay that money back, then you probably should have opted out. But have no fear, your personal financial advisor is here. If you didn't opt out and you fit into either of these categories, set aside the money. That does not mean to just put it in your checking account, because if it is in an account that you have easy access to and you spend out of regularly, then there is a higher likelihood that you will spend it and are going to be in trouble next tax season. If you don't already have a savings account, open one and put the advanced tax credit in there. Do not get a debit card for it. Just let it sit and earn a little interest. And I don't care if it's only a nickel. It's a nickel more than you had, and it's a nickel more than the government would give you if you let them hold on to it, okay? But that's that. Leave it and forget it until next tax season. So when the IRS comes knocking, you can say, Iris, here's your money. It's in this account. Leave me alone. All right, you can continue. And just watch the whole video, please. It's only a couple of more minutes. Don't do a girl like that. It hurts her feelings. Shame on you. But here's my professional recommendation if you are among the general population that are not in need of this money. Number one, invest it. If you have 3 children, 2 between 6 and 17 and 1 under age 6, then you are entitled to a total of $9,600. Divide that by half, you get $4,800. So from July to December, you will get monthly installments of $800. Now let's say you don't need it, then invest it. And if you don't know how, then this is where you should start paying attention. For my military members or federal government employees, you have access to the least expensive investment model there is. It is called your TSP. And if you are not already investing in it or are not contributing the max, you now have the opportunity to do so from now until December. It takes a little while for increased requests to process, like 2 pay periods for civilians and 1 LES cycle for military members, so this is what you do. If $800 is 12% of your monthly taxable income, then increase your TSP contribution by 12%. It will automatically invest the $800 and the money you are receiving from the advanced tax credit will replace it. You won't see it, so you won't be tempted to waste it. It's being invested, and even at a 5% return, you will be earning way more than if you opted to let the government keep your money. If you are contributing nothing to TSP, then using the example I gave, start allocating 12%, preferably Roth, and I recommend the CS&I funds. I'll have to do a separate video explaining why. But if you are contributing 5%, that means you'd increase your contribution percentage to 17%. Another benefit, of course, is most TSP retirement accounts are matched, meaning you are entitled to even more free money from your employer that will be invested on your behalf. Gee, guys, thank me later. Now, if you don't fall under military or federal employee, but your employer does offer a 401k or 403b or an equivalent investing opportunity, then my recommendation remains the same. That's the easiest way to invest and ensure savings for your future. I do not recommend that you invest your child tax credit in cryptocurrency or single stocks unless you can afford to lose the money, meaning you're out of debt, have a fully funded emergency fund, and other lucrative investments already established. Number 2, pay off debt. That's exactly what I will be doing. I have already been working on a plan to completely pay off my student loans by the end of this year, and this only expedites that plan. Again, the government didn't loan me money for free, so why would I let them keep mine? Know what that means? Well, for one, it means that I am saving tons of money on interest, and the couple of dollars I would typically pay on that loan is going to be all mine because the loan will no longer exist. So I can take that extra money and invest it indefinitely or pay off something else or use it for a vacation. My options are plentiful because it's my money, because I don't owe anybody anymore. And you would have the same option if you chose to do the same thing with your advanced tax credit and pay off your debt. Number 3, you might not need the money, but that doesn't mean that you don't need the money.
What?
Let me explain. You might be employed and able to pay for your lifestyle now, but if you were to lose your job and your ability to afford your bills were to change, that means that you are just getting by. You are living paycheck to paycheck, and you need this advanced tax credit to build an emergency fund. If you only have a checking account, and if I were your personal financial advisor, I would recommend that you open a savings account. Do not get a debit card for it and deposit that $800 into your savings each month. By the end of the year, you would have $4,800 saved, and that is for emergencies only. Christmas shopping, not an emergency. New shoes, not an emergency. Vehicle maintenance, not an emergency. Those should be budgeted for, and until you need it, and hopefully you won't, it will at least be earning pennies, which is more than what you would earn if you let the government keep your money. So, just in case you missed it, please don't let the government keep your money for free because they're not giving you anything for free. Until the next time.